This is Mark Anthony with Mercury Time Price Analytics, and we are so pleased and thankful that you're taking time to watch this webinar today. If you trade equity futures, ES and Q, you have to realize who you're trading against. You're trading against institutions that have very sophisticated mathematical algorithms. And if you're trying to trade against them without having that same edge, it would be like trying to derive your income by walking into a casino every day. That may work for a period of time, but week in, week out, months, years, it's not something that is going to be statistically probable to work out in your favor. So what we're going to do today, we're going to talk in a great deal of depth about our ES and NQ trading service. We also have a service for bonds and crude oil. Two separate services, but today we're really going to dig into the ES portion of our trading service. If you're trading just with the typical metrics that you get with your broker, what you find, especially in these choppy markets that just seem not to make any sense, what you find is that if you're short, the machines, the algos will run your stops above price. And if you're long, they'll take out your stops below price. That's what they're designed to do. And one of the reasons that happens to a lot of traders who are not using these algorithms, and by the way, the whole purpose of what we do is to give you, the individual trader, whether you're full-time, part-time, our whole purpose is to give you the same statistical edge, the same risk management edge that the institutions and the large hedge funds have with their algorithms. And the sophistication of what we offer you is not only as good as what those institutions have, in many ways it's better, and I'll point out specifically why I say that. Now, if you're trading against the algorithms, here's one of the problems. Most traders typically start trading using 5-minute bars, or 10 minutes, 15 minutes, 30 minutes. Some will go out to the longer time frames, hour, 2 hours, 4 hours, and some on the other end of the spectrum tend to hyper trade 1 minute, 3-minute bars. Here's the problem. Not one of these time frames, not one, is a time frame that the institutional algos use. Now, if you've ever tried other trading services or what we call black box systems that are somewhat automated in nature, you probably found that most of them don't work, disastrously so. And the reason for that is you can't build an algorithm based on price. Think about the vertical axis on your charts. Okay, hypothetically, price goes from 0 to infinity. There's no way to anchor anything to price. You can't build anything repeatable. You have to anchor algorithms to time. Look at a clock. It's round. There's the same number of hours, minutes, and seconds in every day. There's the same number of hours, minutes, and seconds in every trading day, except for those half days that we do get occasionally. And so the reason our algorithms are so precise is they run on the same time cycles as the institutional algorithms. There's 7 primary time cycles, and there are some sub-time cycles as well. But our systems run on literally the exact same time cycles that all the good institutional algorithms run on. Now let's contrast that with your typical off-the-shelf indicator that's based on price. So here we have Bollinger Bands. Now, Bollinger Bands can be very helpful, but if you're using this as your primary trading metric, it's a very binary decision. You might as well flip a coin. I mean, what's the strategy? Are we long above the Bollinger Band? Are we short below the Bollinger Band? Well, if we're short below the Bollinger Band, what if we're not nimble enough to be taking profits here, and then it reverses course on us? So based on price, very binary in nature, over the long term, you really don't have any more statistical edge than if you flipped a coin. Now let's look at something a little bit more sophisticated. Here we have VWAP, volume weighted average price. And VWAP is an important metric, but it's not an algorithm. Again, it's binary. So if your strategy, for example, is to buy when price is underneath and goes above VWAP. Well, that didn't work too well here, or here, or here, or here. And consequently, if you're short here, well, how do you know where to take profits? There's nothing on this chart but that one binary volume weighted average price metric. And so the only way to build algorithms that are accurate, and I'm going to show you how accurate ours are in a minute, I mean literally to the tick accurate, but the only way to build accurate algorithms is to anchor them to time. And what we give you is not just one time cycle, but you have access to all of them. So let's take a look at something a little bit more sophisticated than this or this. Now on this chart, you have two primary components. What you see weaving through the chart is our proprietary long-short algorithm. The second element are these horizontal lines, which are algorithmic pivots. We never draw manual support resistance lines. Those are subject to interpretation, and they're simply not accurate. And so we let our proprietary time price algorithms tell us where these algorithmic pivots are. So you've got both elements on here, the automated algorithm, and then you've got our algorithmic pivots, which are these vertical lines. And we're going to break down in just a minute. We're going to show you the process, show you what pivots we release each day, when we release them, so you can get an idea of the typical workflow. Now, let's take the algorithm off the chart, and we'll just take a look at these levels. Now, what the algorithm that produces these horizontal lines does is it looks for three things. It looks for support, it looks for resistance, but then it also looks at levels that cut right through key price congestion zones. In other words, you may have seen software that will take the vertical axis and put volume on it. And so when you do that, you see what looks like a little mountain range with a series of smaller peaks, and then sometimes you get these big peaks, which is where you've got high volume nodes. Well, for example, this line right here is an acceleration pivot, and right there was where you had a very high volume area, and it cut right through it. And when it does that, that's the type of acceleration you get. So what you can see is how accurate the algorithm is in picking up all these areas. And these algorithms, we've got two key sets of them. One that comes out in the evening prior to Globex, and then a set that comes out in the morning prior to the open. But you can see how to the tick accurate these are all over the chart, and I'll show you many more examples of this. Now, we're going to take that same chart that we had here, the same chart we had here. We showed you that without the algo on it. Now, let's go back to this. This was December 27th. And what you had up at the top here is what we call an algo hook. And what an algo hook is when you've got in this case, a resistance zone. Here you had two of them. What an algo hook is, in our parlance, is you have price go up above a algorithmic resistance zone, and the institutional algos don't find any stops to run. They find some, which creates this little breakout. But there's not enough for that algo to continue consuming those stops. Well, what do the institutional algos do? And ES is notorious for this. When it gets to the point where it can't find additional stops to consume here, well, then it reverses. And depending upon the setup, sometimes it reverses very hard. Now, how do you take profits on a move like this? Well, you don't have to guess, because with our system, price is going to come down specifically to these points. You can see it on that chart. Now, price comes down, and forgive me for a moment. We've got 2 dogs and 4 cats, and usually in the middle of one of these videos, somebody wants to do something, get in the office, get out of the office, so forgive me for just a moment. So what you saw was this break, and this was a short entry right here at the point that it came up here, stopped, and came back down, broke through the pivot. So it was a short entry up here. Now, how many opportunities did you have to take profits? Count the pivots. 1, 2, 3, 4, 5, 6, 7, 8. And notice every time one of these pivots breaks, it comes right down into the next one. Now, where did it stop? It stopped to within a tick of these two pivots here, the trend confirmation pivot, and we had one of our Globex extension pivots. So this is before that day started. And we knew right going into that day, if these pivots here broke, well, let me take a step back. We knew that if price came above this pivot and did not extend, that the institutional algorithms were likely going to reverse and start taking out these levels very quickly. And that's exactly what happened. So not only do we give you algorithms that indicate where to get long, where to get short, but the horizontal algorithmic pivots give you very precise levels at which to take profits. So if you're trading multiple contracts, it allows you to manage the trade. So you're taking off the first third after that position starts to move favorably. Typically, you're looking at between 2 and 5 handles where you're going to take that first third off. And the idea of trading in thirds is when you take that first third off, you've gotten the risk out of the trade. Then the next thing we do is we look for the spot to take the middle third, and then you've got the runner left. Now, you know, the thing with the runner, that last piece, you have to give that runner enough room that a typical check back isn't going to take back your stop. Well, what we've seen in the markets lately is you'll get these violent moves down, followed by a violent move right back up. And so in this particular example on December 27th, we took that position off right here. Now, could it have gone lower? Of course it could have. But it made more sense to take the position off within a handle of this pivot, knowing that if it came back up, you know, you could have a very strong bounce. And look, there was an opportunity here when it came back down below this yellow pivot. This was a live pivot. I'll tell you what those are in a minute. But there's always an opportunity to get back into the trade, and that's what we did that day. We took profits down here. It came back up to this trend pivot. We knew that if it broke this yellow pivot, that it was likely to go lower. It did. It came back and tested it a second time, and then it came down even more. And then it tested it again and came down even more. So these pivots allow us to have a level of trade management that many days the profit is more than the movement from high to low in ES. I mean, we trade in thirds, so even at the very least, if you're trading 3 contracts and you manage this trade properly, you end up booking more handles than the width of the move from here to here. So let's talk about how we break all this down. I want to show you one more slide, though, as a preface to showing you how we do what we do. This was December 9th, and I can show you charts that have this level of accuracy literally every single day. So a handle is, of course, a round number. So if ES goes from 33.20 to 33.21, that's one handle. Within each handle, you have 4 ticks. So notice all the spots here where it was within 1 or 2 ticks, not 1 or 2 handles. So this first move down was within 3 ticks. We had this move back down, and then the failed retest was less than a tick to where this pivot was. And these were put on the chart before this day began. Then you get another move down to this pivot by less than a tick. Then you get a little bounce up, failed retest, down to this yellow pivot within less than a tick. Less than a tick. Here you had an absolute bullseye. And then you get a move down that comes down here again, bullseye down here. Now that is 31.16. You had this move start at 31.50. So you've got what, 16 from 50. So you have 34, 35 handles and have it stop to the penny, not even to the tick, right here. And that's why I mentioned earlier, I'm willing to bet that our algorithms are more accurate than even anything the institutions have. And the reason for that is this system is a multidisciplinary approach. It uses some very esoteric elements of GAN. It uses some very esoteric elements of cycle theory, and it's got a number of other things that we can't tell you. But um, there are a number of key things that are put in this together, and there just isn't anything that takes that exact combination of what we put together that results in this. So let's talk about how we put this all together. One more chart though. Here you had, what day was this? This was December 3rd. And this actually shows you the same thing we just looked at, forgive me. 3158. Now this was a different day than the other one. This was 3150 down to 3070. Huge move, 1% move in the first hour that stopped within a tick. And I'll show you an example of our system doing that this week. So this is not unusual whatsoever to get that length of a move, 3158 down to 3069, and have it stop on a dime. All right, so let's walk you through a typical day. And we'll start on a Sunday. Sunday Globex opens at 6 o'clock. So each day before Globex opens, whether it's the Sunday open or each weekday Globex open, the first thing we do is we produce what we call the Mercury bands. These are long cycle pivots. Even the short cycle is a very substantial look back. The long cycle just happens to be much longer. This particular set of Mercury bands was the set run on, let's see, the 20th and 21st. Okay, so this was run Thursday evening, and this pertained to Thursday and Friday. So when we run these in the evening, because these are long cycle algorithms, we put these out in the evening before Globex, sometimes a little bit after the open, but we get them out as quickly as possible. And because they're long cycle, they run all the way until the 5 p.m. close the following day. So on the 20th, when these were put out before the Globex open, these run all through the Globex evening session, all through the early morning session, all through the day session. So these apply for 23 hours. And then the following evening, we do a new set. So we post this on our Slack channel. On our Slack channel, there's a section that says chart data, and that's where you see these Mercury bands posted. That's what I just shared with you. Now, in the morning, we've got a set of pivots that are much more granular than those very wide Mercury bands. And these are called Mercury dynamic pivots. And this is something that I do not believe exists anywhere other than in our service. Because when we run these algorithms in the morning, not only does it give us a price level, but it affixes a name to each level. And what that name does is it ascribes to that level the type of behavior to expect when price gets into it. So here you have the 20th, which is Wednesday. You had the trend confirmation pivot at 3381. Now, these orange pivots, they're coded the same color because these are all trend pivots. Here's a short-term trend, a little bit longer trend, and an even longer trend. What happens when a trend pivot breaks? You typically get acceleration, and that's why you've got these acceleration pivots. So this was, now the 20th was, today's the Sunday. This was Thursday, forgive me. So here we have, we'll take a look at the chart and see how this worked out. Trend confirmation pivot at 81, acceleration pivot at 78.98, call it 79. Let's take a look at the chart. So here you have that day. Here's Thursday. So you come up here into 33.89. And again, where was the acceleration pivot? 33.78.98, so we'll call it 33.79. Right there, where you see the crosshair, that's 33.79. Now, if we zoom in on this, you can see initially it came down right to it. I mean, to the tick. And then on this next bar, that's where it broke and you got the acceleration down, which gave us 50 handles in 45 minutes. Now, I'd mentioned earlier, we showed you those charts from back in December. So here you had 50 handles in 45 minutes. And here you go. 50 handles in 45 minutes, stops within less than one tick. I'm sorry, less than 2 ticks. So this Mercury band and the Mercury bands were what we showed you here, okay? So here you have the Mercury band that is, sorry about that, went back to the chart rather than the screenshot. So you have the Mercury band here that was at 38.81. The low is 39.25, less than 2 ticks. Now what's interesting about this is notice where this whole move started. At the Mercury band upper level, which was 84.91. You carry this line over here, it's right there. That's right where this broke. And these were pivots that were put out the night before. Now, I said earlier that the algorithm looks for support or resistance, or it looks to completely bisect through congestion levels. We couldn't have drawn that. Look at this, where this came back down and then made the new high. You and I couldn't have put that on the chart any more accurately. That's a computer algorithm that generated that level. I didn't have to go in and say, well, this is going to be a big level if it breaks. The algorithm picked that up. And so when you had this move that came down here and came back, you had a failed retest, and where did it break? Right there. So it broke the Mercury band upper level. And where did it go? Within 2 ticks. 2 ticks, not 2 handles, 2 ticks of the lower level. Now, you know what's amazing about it? We were taking that last bit of profit within a couple handles of this area. It broke through all these support levels. It broke through this time price regression line, the orange one. It broke through this red time price regression line, and that's something else that's proprietary. I've never seen any other service that has these algorithmic time price regressions lines. By the way, you can see where this break came on Monday. Now, on our Slack channel, this was posted Thursday at 7:50. Wanted to share the screenshot to illustrate the amount of technical damage that was done today. This will have implications going forward, just as the technical damage that occurred on January 2nd had implications resulting in 3 additional strong moves down in the subsequent 7 trading days. That doesn't necessarily mean that we'll see additional sharp moves down into next week, but in most circumstances, this type of chart damage will manifest itself on more than one occasion after the initial reaction. So this was Thursday that this was put on there, Thursday evening. What did we get Friday? Let's go back to the chart, and you can see right here, boom. We get that kind of crazy move down on Thursday, and what happened the next day? On Friday, we had the open right in here, and it came down hard again, down to 33.27. So I mentioned on the Slack channel that this type of move will typically precede more fast moves. And I want to go over here. So here we've got on this screen, this is our day trading chart, and this is our swing trading chart. And we've got these things zoomed in on the live chart for our subscribers. And, you know, one of the advantages of what we do is I'm on the mic all day long describing the setups. Now, we've shown you a couple of the pivots. Continuing to show you how all this develops. Here are the Mercury bands that we give our subscribers in the evening. These apply for Globex, and then all the way until the end of the next day session, so 23 hours those run for. We give you the Mercury dynamic pivots in the morning. Now, these levels, they're posted on the Slack channel, but more importantly, they're overlaid on the chart. So when you log into Zoom, all you need is a free Zoom account, and then we give you a code every day, so that when you see the live chart and you see price moving all throughout the day, you already know where those levels are, but you don't have to put them on your chart. We have these right on the live chart screen. So you can have that printed out and have it next to your desk, just so you have an idea. Now, what's the next thing we do in the morning after we do the dynamic pivots? About 8 o'clock in the morning, we put out our single daily algo bull bear pivot. This literally is the most important price of the day. We put this out at about 8 o'clock Eastern time, a full 90 minutes before the market opens. So on this particular day, Friday, it was trading right there. That has absolutely nothing to do with it. This is a time price algorithm. It has absolutely nothing to do with where ES happened to be trading that particular day. Could have been trading up here, could have been trading down here. But on this particular day, it just so happened that at the time we run it, and it's a formula, it has to be run at an exact time every day. But this single daily bull bear pivot is without a doubt the most important price of the day. And you can see what happened. We get the open, it comes up, tests it, and then boom. Now, later on in the morning, we provide another set of pivots that are called X5 pivots. And the way the X5 pivots work is a little bit after 10 o'clock. We calculate those pivots because all of these time cycles, you have to take certain readings at certain times of the day. It's not enough just to know what the time cycles are. You have to know the exact specific times of day to look at them and generate the levels, because those are the same levels that are generated by the institutional algorithms. It doesn't take long for you to be in our service to see that our system does exactly what we says it's going to do. It gives you the exact same pivot levels that the institutional algorithms are trading off of. These X5 pivots are literally the institutional dip buy. When price is trading in a healthy uptrend, when it comes down into the X5 pivot, that is exactly where the algorithms are programmed to buy the dip. Exactly. Period. The other side of that coin is when the market is weak, as price goes up into those X5 pivots, it'll do the same thing. So anytime during the day that any of those X5 pivots are broken, it's important. Now, the last piece of the puzzle are what we call live pivots. Now, these live pivots come out a little bit after 2 o'clock. Why is that? Well, because some very key time cycles occur a little bit after 2. Now, back in the day when institutional trade rooms were predominantly run by humans, what you'd have happen is at about 1:50 Eastern time each day, the folks that manage the trade floor would get together, have a quick meeting, talk about what happened in the morning, and get a game plan for the afternoon. Because right after 2 o'clock, that's when things start moving. The reason that they have that meeting at 1:50 is because they need to get a game plan, because those key pivots are going to come out a little bit after 2 o'clock. And so a little bit after 2, we generate our afternoon live pivots. And you can see, for example, in yellow right here, this was the Friday afternoon live pivot, 33.47. And you can see that's the key price in the afternoon. When we put these out, literally that is when price starts moving in the afternoon. So when I mentioned earlier that what we do is we level the playing field, we're literally giving you, the individual trader, access to the same tools that the institutions have. and we're not charging you millions of dollars to develop them. Our service is extremely reasonable given the fact that we're giving you the same information that those institutions are running. Now we're going to take a look at a couple more things because we can give you early warning about where things are starting to break and where things are starting to turn, both on a short-term and an intermediate-term basis. So here we've got ES, and these pivots here these are between short-term and intermediate-term. I'll show you the intermediate-term in a minute. But you can see how accurate these levels are here. Price comes down to it again, comes down to it a third time and recovers, and after that then you get the fast break. Now this fast break on Thursday took out both of these algorithmic pivots. And what I do during our live chart is there's only so much information that we can put on the live chart for the members. And actually, you've got the day trading algo, the swing trading algo, and we've got about 6 other things that are on the charts at the bottom. So we've got a number of different indicators on here. What I do during the day is throughout the day, as pertinent and relevant, I'll show these longer term algos so that our traders have an idea where price is likely to go. So, you know ahead of time, if this level breaks, well then at the very least you're going down here. And it did that and then some. And then it broke it again. Now let's go out to a little bit longer cycle than this. So the last chart was short to intermediate term. Here you've got a longer cycle. This is intermediate term. Now look at how precise this is. Right down to within a couple ticks here, and you get a bounce. You get a little bit of a break and a recovery and a check back to the tick, and then you're off to make the new high. Then it comes down here to the tick again on this first extension bar, bounces a couple of handles from 70 to 75, and then splat. So now what's happened on Friday, Thursday and Friday, is ES has broken not only the short-term pivots, it's broken the pivots that lie in that nook between short-term and intermediate term, which is what you see here. But it's also broken the intermediate term pivots. And here's what we have to be aware of on a longer term basis. You had this high up here into 33.38. You had a move down below 32.40. Recovered back up to 3,300. Had an even deeper move down. And then you get this blow-off action. So this cycle is even longer. So we'll look at these sequentially. This one is just a little bit longer than short-term. So this is between a short-term cycle and an intermediate cycle. Here you have the intermediate cycle, which broke right at 33.71 and then failed to retest. And then moving out, this is the longer cycle. So we're not just giving you this very, very granular stuff intraday. We're keeping you apprised of what's going on in the larger context. So I mentioned a little bit ago that during the day, as price is moving, I'll flip over to these longer term cycles to let our traders know where, in this case, this is an area where it's likely to find support. And it did, just barely. But that was the point where we told our traders, okay, that's enough on the short side. We're not going to get much below this. Now, if this breaks right here around 33, 36, well, then the next level in play is 33.11. So if by chance this breaks, and this is being recorded Sunday afternoon on February 23rd. So if we get a down open in Globex, this is the next key level that's in play, 33.11.83. So just call it 33.12. Now if that breaks, this is the area you have to look out for, 32.73. Because if this breaks right here, then this whole structure starts coming apart, and it tells us with a very high degree of certainty that this whole thing here was a blow off, and now the trend is going to be down. If it breaks this red algo here, which currently is at 32.58, then the entire intermediate term trend has flipped. So these are just some of the tools that we give our traders. So going back, we're able to provide our traders with the level at which this structure breaks, the level at which price comes down to, but also give our traders these longer term views so they can see what's happening when we move out beyond the very short term context. Now, there's services out there that just provide pivot levels, and that's it. Well, not only do we provide the pivot levels, I believe we provide the most accurate algorithmic pivots anywhere. But the value of this service, let's say you're a newer trader. One of the things that newer traders struggle with is risk management. And although you know how the disclaimer goes, past performance is not indicative of future results. So we can't guarantee you results. We don't do that. But what we can do is we can absolutely teach you how to manage risk like a pro. Because one of the things that most new traders get wrong is risk management. They put positions on that are way too large for their account. They use stops that are way too large, and they don't incrementally take profits in a trade. And newer traders typically get obsessed with their win rate, the percentage of trades they're right on versus the percentage of trades that they're wrong. Well, the fact of the matter is that really has relatively little to do with long-term trading success. Long-term trading success is based on risk management, and it's based on managing the trade once it starts becoming profitable. So, you can find some very, very good professional traders that'll tell you, they're right about the same amount of times that they're wrong. But the reason that they're still doing this year after year after year is because the amount that they're making on the trades where they're right is much, much higher than the couple of handles that they lose when they're wrong. So that's the value of what we give you here. In our trade alerts section, every trade is in here. So you had 49 handles on Friday, 84 handles on Thursday, but every trade is in here, not just the entry, but every time we adjust the stop. And so for our subscribers, they've got a live chart seeing price move in and out of the chart all day, up and down through the chart, forgive me, but they also have a professional trader, which is me, that's calling out the trades. So the total number of handles this week, 246 handles this week. Now again, past performance is not indicative of future results, but we'll give you a little bit deeper peek. Based on these recommendations that are right there for our subscribers, 3 losing days in the last 3 months. We had one in one in December, which was a little less than 3 handles. We had one in January, a little less than 3 handles. And we had one, it was either last week or the week before, that was a little less than 4 handles. But one in December, one in January, one so far in February. But yet, when you're looking at the number of handles, here you had this trade Friday. I mean, the first third was 20 handles. And so there you have it, 246 handles in a week. So we certainly hope that you'll take a look at our trading service. We've got 2 services. We've got a service for ES and NQ. We've got a separate service for bonds and crude oil. You can have one, the other, or both. We bill bi-weekly, not monthly, so you're not committing to a month at any one time. We give you lifetime rate lock. So whatever the rate is at the time that you subscribe, you never have to worry about a rate increase. And you can cancel at any time. What's the cost of our service? You can go on the website, but not to be cryptic about it, I'll tell you what it is. One ES handle, if you trade in an E-mini, a handle is each round number. So if ES goes from 33.85 to 33.84, that's one handle. One handle on an E-mini is $50. The cost of our service is $68 a week. So you're talking about a little more than one handle a week. And you had 49 handles on Friday and 84 on Thursday and 246 a week. And again, past performance is not indicative of future results. But the reason that we have consistent results is because we manage risk, I believe, better than any trading service anywhere. And that comes not only from doing this for 35 years, but it also comes from having this level of math to allow us to know exactly when things are breaking, exactly when things are taken off. So if you want to check out our website, it's mercurysignals.com. Once you sign up, you'll get a welcome email. That welcome email usually gets sent out within an hour, depending upon the day. If it's right in the middle of the trading day, then sometimes it's a little longer than that. But typically within an hour, you get your welcome email with instructions on how to log into our service, how to access the Slack channel. On the Slack channel, we've got some very, very detailed tutorials, videos, and other documents. Shows you how to use our automated algorithm, shows you what pivots come out at what times a day. It's very, very simple. So even though we're giving you incredibly deep math in these algos, our systems are not difficult to use. So if you have any questions, you can reach me at markanthony@mercurysignals.com. And to get to our website, just type in mercurysignals.com like we did here. And we host our site on WordPress, which is the platform about 42% of all websites use. So when you type in mercurysignals.com, it sends you to our hosting, which is on WordPress. And then just click the subscribe button. And there you go. Click down here, and that'll get you all set up. While you're on our website, you can find out more information about our ES&Q service if you wish. You can find out more about our bonds and crude oil, which absolutely crushes it. You've got our videos here. Now, we don't post each of the daily videos that we do on YouTube, but the weekly videos are on here. And then this was the one that was just recorded last night. Those of you that are late 50s like me, you might remember the TV show Lost in Space. So the title of this week's video weekly wrap-up is "This Does Not Compute." And you can find the written version right there as well. Okay, and that's got all the weekly versions, including Mr. Mean Kitty from last week, where we were talking about mean reversion. And what we meant by that is, you've got folks pounding the table telling you to buy the dip when ES and NQ are trading 3 standard deviations above the 200-day moving average. That's nuts. Financial malpractice is what it is. Week before that, calm before the storm. So, we've been talking about this coming, what we're seeing right now. And, although the coronavirus is having an impact on what's happening in the markets, it's the math that's been all messed up since the end of January. Go back on a chart and, go back to January 22nd. The setup that you saw on Monday of this week looked very, very similar to what we saw January 22nd, followed by weakness on the 24th, the 29th, and the 31st. So These things have been coming. Um, but we thank you so much for your time. We do hope you'll check out our website, take a look at our subscription. You're not even committed to a month. We bill biweekly, so to take a look at our service, it's 138.54. That gives you 2 weeks, and I promise you, within a couple days, you will realize that there is nothing else out there that has this level of accuracy, this level of tools, this level of training, this level of risk management, or this level of proven success. So we thank you so much for your time. This has been a 45-minute video, much longer than we intended. We wanted to dig really, really deep into what we do to give you the best opportunity to evaluate if this is something that you want to try for a couple of weeks. But we thank you so much for your time. God bless you. God bless your family. And we look forward to seeing you again soon.